Hi everybody, welcome to It's Your Money. I'm Joanne Morgano and I'm joined by my co-host Martin Saltzman. Do you know what I love most about this show? I love it when we can bring back former guests. And our guest today is Wall Street veteran Peter Grandich. So before we get some of his predictions and great thoughts and insights, Martin and I are going to talk to you quickly about the market. Go ahead, Martin.
Hey, great joining you again, Joanne, as always, right? Yeah. So a lot to talk about today. We have the conflict in the Middle East is top right now. We have the Israel-Iran war, we got to call it, going on. And, you know, markets don't like that, okay? But the but is, I think the markets are not fearing the worst anymore. You know?
And why is that?
Well, they're acting better. They're not getting plundered. I think they realize that Israel has the upper hand. As they've stated, they have control of the skies. And of course, Big Brother USA is behind them. And we may provide bunker-busting bombs to take out the rest of the nukes.
With all of our war capabilities to defend and to procure, I think it's because the oil position too. And I'm a big fan of oil, and the position with Iran, it's degraded, whereas the U.S. is stronger, and it is the strongest in the U.S. in the oil position. So I think that's why we haven't seen the flurry in the markets that I anticipated sort of this week and last week.
Yeah, and you know, actually it's interesting you say that about oil, because the Strait of Hormuz is actually of some concern to the markets because, you know, let's say, you know, Iran is ultra desperate. They may try to do their best to block the strait or do something so that oil can't get delivered. So that is a factor, okay? So obviously for our viewers, the whole issue over there in the Middle East is something to be concerned about. Coming into the show, the Federal Reserve was meeting again today, and of course Trump wants lower rates. He's been very vocal about it, including this morning. But the meeting has concluded, and they are keeping rates the same. Unchanged. And you know, Trump's argument is, look, they've done 10 rate decreases in Europe already. How come, you know, Powell is slow to do this? Now, he'll argue that, well, we have to keep ahead of inflation and we don't want to have inflation stoked up again. On the other hand, Trump wants to see lower rates because we have to refinance our debt. We're carrying so much debt. And if we can keep interest rates low, we save money as a country, right? Billions to say the least. And the other issue is domestically, of course, we have the sanctuary city issues. We have protests in the streets, and look, they're paid for. These people are organized, and rather than actually protesting against ICE, they're actually going in and they're vandalizing and they're stealing. If you're protesting against ICE and things that are being done to these illegal immigrants, why are you trying to rob stores? These people haven't done anything. So there is a lot of problems in these sanctuary cities. So by and large, those are the three, let's say, biggest concerns right now. Markets, I think, are holding their own.
Yeah, real estate market is soft. It's homes are not moving, but there's reasons for that. But it's the softest it's been in 5 years.
Yeah, I mean, I'm seeing a little more supply on the market than I have in the past 2 years. But with interest rates a little higher, first-time home buyers have a harder time, you know, making that payment to buy that new home. So we have to watch real estate too. But
yeah, but inflation, I feel like it's better. You know,
it's better. With this outbreak though in the Middle East, we have gone in just 2 weeks. We went from $69.90 a barrel on oil, and we were effectively at $75 a barrel. But you know what? As things get calmer, and we realize that Iran doesn't have a fighting chance, I think the oil prices will back away again, don't you?
I agree. I agree.
So let's get to our special guest,
Yes.
and this special guest is very important to me. His name is Peter Grandich, and I've known Peter, gosh, it could be going on 34 years, perhaps?
Since you were babies in the playpen.
Maybe, yeah, I don't know. But Peter is an unbelievable person. He's an author. He's written a book. He has appeared on Good Morning America. He's been in Barron's, Wall Street Journal, Fox Television, CNBC. I mean, I could go on and on and on. And he predicted the crash of 1987. So that's what got him such popularity. And he also, I might have it wrong, and I'll ask Peter to correct me, but he had started the Fellowship of Christian Athletes, and he does a lot to try to help them and help them understand investing and protecting their assets. So Peter, and lastly, I want to say before we bring Peter on the set, if it wasn't for Peter, I wouldn't have met my wife. So I have to get that in there. You know, Peter and his wife introduced me to my wife, Ginger. So Pete, welcome to the set.
Well, thank you both for having me.
Yeah,
It's great to
have
see you again.
What did we miss? Did I miss anything that I should have talked about in your intro?
All of that stuff is just fluff at this point in my life. You know, I was once a legend in my own mind, and those things mattered during those days.
Oh, yeah.
But after you lose and make money not once but twice, those things don't get that important.
And that's why you have a wife, too, because we kind of keep you modest.
Absolutely. And the Fellowship of Christian Athletes happens to be a Christian sports ministry. What Marty was trying to drive at is for over 20 years, I worked with athletes doing Christian Bible study in chapel, 13 years with the New York Giants, and had a business that was supported athletes both spiritually as well, helping with their finances.
It's great stuff. In the book, of course, too, Confessions of a Wall Street Whiz Kid.
Yeah.
That's a really cool thing.
Yeah.
And I think you're in your 5th edition.
Yeah,
right?
and we changed the name to the former Wall Street Whiz Kids because, like I said, after you made and lost millions not once but twice, you really shouldn't call yourself a whiz kid. So that's why we changed it to former Whiz
Well,
Kid.
it's just good to have you back.
Yep,
So
yep.
here we are. We're in the middle of June, and we're halfway through the year. What's your assessment of the first half? How do you think it went?
You know, I think both Bulls and Bears could have a decent argument at this time, and that's why we're basically flat for the year. For the bullish case, a change to Trump, who seems to be more stock market oriented. He certainly speaks a lot more about it, ties what he's doing and success or lack of to the stock market, certainly would make Bulls more happier. I think the Bears have cases. The one thing that I think Trump has stumbled on, in my opinion, is how he approached the trade war. I think 20 or 30 years ago, you could have been a little bit of a bully. But now, given where the world that continues to move away from the United States and its dollar, I think he would have been better off with an olive branch versus a big stick. And I think that's going to come back to him. But basically, the first half of the year is each side can say, well, I think it's working for us. And then, of course, what happens in the second half will be the decider.
So that's an important thing. You know, looking through the rearview mirror is easy. So what do you think, or what are your visions for the second half of the year? Because there's a lot going on out there in the world, you know?
Well, in my 42nd year, and once used to do a lot of television, especially when I worked for you and your partner Lou, every other week on CNBC, I learned one thing. Those of us that look into a crystal ball to try to predict the future, the only thing we become experts at is how to eat a lot of broken glass. So I'll just say, with an asterisk, it's only a guess, maybe because we've all been in this so long, we can make educated guesses, but we're making good guesses, hopefully. I think we'll move through, as you spoke about the current Middle East conflict. In fact, ironically, although I have a bearish stance, the Middle East could actually turn positive out of this. Donald Trump in his first, whether you like him or not, and that causes me issues. My wife is a Magna, I'm not. But I'm not a hater either. So I get it from both sides. Both sides are mad that I'm not enough on their side. But one thing he helped change, both in his first term and now, is there's clearly multiple countries in that neck of the woods that don't seem to want to despise and destroy Israel. In fact, they could possibly work with him the same way that Egypt did. And the big thorn with that was Iran. So if this continues, and if there is a change in regime, and what some of the people seem to be expressing in Iran now, that they would like to see that, this could turn into a quite positive. The problem I have with that is I think what he's done about the trade war and where the economy in general is going would negate any of that. My call at the beginning of the year was we were going to be flat for a year. We're going to be either side, up or down. And I really still think that's going to be the case. I think bulls still have a good argument. There's still enough earning power and such to support stocks. But at the same time, there's a shrinking strength in the economy, which I think eventually impacts the stock market.
So Pete, I just want to add to what you're saying. You know, you're speaking about the Abraham Accord.
Yes.
And that's where several of these Middle East nations have befriended, let's say, or at least accept Israel. You know, and I really think you're right. I think you have a lot on that. And it would not surprise me if Saudi Arabia was one of the very first countries to join in that accord. And that could open up a lot of things economically for all the countries over there.
Quickly add to that, Marty, I think Trump had those discussions in this previous
When he was
trip.
there. Yeah.
They knew already things were shaping possibly Iran, and one probably asked, hey, how do you guys feel about this? And I think he got a pretty good understanding. If you notice, we haven't heard any acclamates from them about demanding this end and protest and all.
True.
No.
I think they like to see Iran, as it was, gone as well.
Yeah,
Yeah.
and you know what? For the Iranian people, it could be very, very positive once we get rid of this. I don't know what you want to call them, the leaders that are there now. You know,
Well, you don't want people that believe in a God that believes he wants you to kill other people. That's the trouble.
fair point.
Yeah,
fair point.
it's sad. It is. All right, so let's shift a little bit. You're a gold bull, right? You love gold, and it's in a great spot right now. How do you see it moving from here? How do you see
It's a
silver?
good question.
Well, you know, it's ironic, but since the January 1st, 2000, it's outperformed both stocks and bonds. I made it unusual, very unusual. Very few people chose to listen, and I understand why. But at the end of 2021, I became so enthralled with gold for capital appreciation, not to save me to get a loaf of bread in case there's a war or anything, that I actually sold stocks and bonds to own gold for capital appreciation. And it paid off. It's gone up 4 times what the stock market has, and bonds actually lost value. I think the issue for now, somebody at 34 or 3,500, it's not cheap anymore.
Right.
It's not something that I think you can expect another doubling in, as we were fortunate to have. But I do think it's signaling a change, and now it's even held more by central banks than either the euro. The only thing central banks currently own more than gold is the dollar. So I think it's becoming what it always has been for years. It's becoming an alternative to paper currencies.
Peter, I think when we met each other, it was somewhere late 80s, early 90s. You were off and on, times very bullish on gold when it was in its hundreds. So, I mean, you deserve a lot of credit because you've stuck with it. And your clients and your people that listen to you, they have made some money.
Yeah, there were a couple times we turned bearish, but more times than not being long. But again, understand this, it's not something, you buy it as you buy insurance. And we both have car insurance, we have home insurance, we don't want either one to burn or disappear. That's what you own go for. It's very rare to do what I do, to actually own so much, because I want to make capital appreciation on it.
Yeah, well, you're a smart man. And with that thought, we got to take a quick break.
Right.
We'll be right back.
I love that we both got an awesome network and save money doing it.
I know, $25. I love that it's guaranteed for 3 years.
Hey, we're sitting on a sign here.
Switch and get Welcome Unlimited for $25 a line, guaranteed for 3 years. Verizon.
No signal. I don't have home internet.
Oh, that's a red flag.
Find the bars.
Your mom looks a lot like me.
Yeah, couple of hotties.
Thank you?
Ah, man. There's dead spots all over this place.
There really are. Oh, wow.
Nothing. Are you getting a good signal?
No, I'm not.
It's time for real home internet. Get it on the next generation 10G network, only from Xfinity.
I love that we both got an awesome network and save money doing it.
I know, $25. I love that it's guaranteed for 3 years.
Hey, we're sitting on a sign here.
Switch and get welcome unlimited for $25 a line, guaranteed for 3 years. Verizon.
Welcome back to It's Your Money with Joanne and Martin. Special guest Peter Grandich, 40-year Wall Street veteran, joining our set for the second time. Plus, we got to mention his daughter's getting married next week in Ireland, so that's a big deal, Pete, and congratulate her for us. While we were off on our break, we were continuing our discussion about gold and the metals, and we should just take 1 minute and talk about silver. Because silver seems like it's never really caught up to where gold is. I think today it's around $37 an ounce.
Sure.
Do you have any comments there?
Gold continues, and one of the main reasons it's risen to what it's done in these last several years is central banks have been huge buyers of it. They're not doing the same at the moment with silver, but silver has risen because it's more of its industrial use. Okay. Has far more uses now than it did 20 or 30 years ago. But gold will always stand in front of silver. From a monetary standpoint, but at times they do run hand in hand, and this is one of them.
So for clients and, clients of Joanne's and mine who, express an interest, they want to know how they can get involved. And you were smart in saying, well, it may not double from here so easy. But there are people who want to buy either gold coins, maybe gold mining companies. How can they do that?
And use it as a hedge against
Well, let's
inflation.
talk about the last one first.
Okay.
There's an old saying that Mark Twain has that a gold mine's a hole in the ground with a liar standing next to it. So for those real risky ones where 1 out of 10 might actually find a mine and all, it's the same as going to Atlantic City. You're going to take that type of money. If you lose it, fine. The other side of it, having companies now that physically own the gold, the GLD, which is the biggest one, trades in the New York Stock Exchange, it's really a proxy to own gold. It owns physical gold, and it basically trades the same percentage. Even though you don't physically own it, you have it as a stock. Okay. Most people should stick to just that. Coins, be careful when you hear coins, because there's gold coins, and then there's numismatic coins, which are really trading on the value or the collectible of the coin versus the metal in itself. That's a market that you really need real expertise to be involved in that.
Very good. Very good.
So thanks for that. Can we look forward a little bit? What do you think is going to be happening? What are some of the things investors can look forward to?
Well, as I stated earlier, I have a pretty bearish outlook. In fact, my equity ownership is only outside the United States because of 3 years ago I made a decision. I thought that the BRICS, which is known as a group that's been formed outside the United States, more countries are joining it, to both trade away from the United States and not use the dollar, is a growth industry. I think more and more that's going to happen. So a lot of the areas that they're involved in, I find more attractive. Plus, on valuation basis, the U.S. stock market was much, much higher than them. I think there's a few things to be concerned about. I'll name them if you want to talk about it.
Sure.
I have 5 big concerns. The biggest is the debt.
Okay.
When Marty and I started, there wasn't even $1 trillion in long-term debt. We're now approaching $37 trillion. And now we have a Congress that's willing to spend $2 or $3 trillion more that we don't have each year. Congressional Budget Office says that in less than 8 years now, we're going to be over $50 trillion. Put a 5% interest on that, just 5%. It's $2.5 trillion in interest. Best year we ever had was a couple of years ago as a country. We took in about $6 trillion in revenue. Almost half our money is going to pay interest. We're not going to be able to run the government as we used to. So the debt is still the big issue. I think there's a huge retirement crisis coming. Not that we didn't do anything right for our clients in that regard, but we have 2/3 of Americans working paycheck to paycheck. They're not going to reach that golden year of retiring and living and playing golf and all that kind of stuff. And they're going to have to work longer and harder. And it becomes more difficult. Trust me, at 69, it's a lot harder to do the simplest thing.
You don't have any fear or concern about Social Security or any of the other?
Well, Social Security will have to change dramatically as we know it. They'll raise the age limit.
Okay.
They'll also greatly lower the amount of money you make before you don't collect it.
Okay.
And they're not going to cap it anymore where it's 8% of your income. It's going to be, hey, if you make $1 million, we're going to take 8% of that. That's the only way it can stay viable past that 2033, 34.
So number 3, what's 3 on your list?
3 is infrastructure.
Okay.
I believe that you just have to look around. Here in New Jersey, it's not hard. Every day a water main pipe is breaking. There's sinkholes and highways, roads, everything. Tie that into natural disasters, which are happening more frequently. I'm not here to argue global warming or anything. But I have a 5th one, and it's very politically incorrect to speak about. So you just don't invite me back next time after I say it. But I believe there's a worldwide cultural change happening. We're seeing in Europe. We're seeing Western civilization seeing a different life looked upon by a group of people who look at world differently than the Western civilization.
Are you talking
does.
about the globalists?
No, I'm talking about the Islamic movement that's happening both in Europe and other countries and in the United States now. They have a completely different way of looking at life. That's the fairest and nicest way to
Would
put
you say you would use the term anti-capitalism?
No, I
More
would
socialism?
say it's anti-anything but what they are. They don't have an open ear for anything but their beliefs.
Okay.
And the trouble that we see that now is you only have to look at places like England and France and Ireland and others in Canada and now here in the U.S. as well. It's not on the radar now, but if your show, and I hope is successful and continues 3 to 5 years from now, I do believe it'll be a topic you'll be talking about more often.
So I had 4 things that you mentioned. It was debt, retirement crisis, infrastructure, cultural change. We're missing one.
Well, an aging crisis.
Aging.
And the aging crisis is this. Eventually, if I make it to the 80s and I'm going to want to spend $500,000 on some heart replacement and all, there's going to be a 35-year-old, 40-year-old guy working who can barely put food on his table, but they're taxing him to death to keep paying for my medical services. And he's going to say, enough is enough. This guy, Grandich, he's seen enough. I'm also going to say, well, hey, you took from me all these years. I want. We're going to have a battle because younger people are not going to be able to live in the lifestyle that the boomer generation did. And they're going to get to a point where they're going to say enough is enough. It's too much financial strain. And as boomers pass and that money shifts to younger age, so will the politicians shift because politicians go wherever the money is.
Interesting, Pete. That's some insight you have there.
Yeah. What's your opinion on interest rates and real estate?
Well, real estate has changed in this. We learned in COVID now, office space is probably not what it used to be. I also think big homes is out. I think whatever youth does going forward will be in smaller homes. I think one of the things I think still be growth is 55 and over. I also think that we're going to see movement to where commingling, where people who are not related but can't ill afford to live on their own but can't afford a nursing home are going to have like group homes. That's an area. Interest rates is, it's tough to get a lot of lower interest rates because people are growing concerned now will be able to make the interest payments. And if interest rates go too low and the dollar weakens, there'll be more of an exit out of us bonds. That's one of the reasons why the Fed doesn't want to lower it as much as Trump does. But he is going to be replaced fairly soon. And Trump is clearly going to put someone in there that he's expecting to be much more friendly to interest rates than the current Fed chairman is.
Interesting, yeah. And look, let's face it, for our viewers' sake, lower interest rates can spark inflation. You get too many dollars chasing too few goods, and that causes inflation.
I don't know if you're out of time. I just want to say this. I remember going with my wife looking for our first home, and the realtor said, I think I can get you a 15% mortgage. People get crazy about 5 or 6.
Oh, yeah.
But 5 or 6, because we went too low at 1, 5 or 6 is still not a bad rate
not
compared
at
to
all.
what
No,
it
it's
was.
not. My first mortgage was 11%, so.
Yeah, it's just amazing. What else did you want to ask Peter? Anything else?
Investors, they tend to focus domestically. What opportunities do you see outside of the U.S.?
Well, we've had about $25 trillion in the last 20 or so years net come into the U.S. from foreign investors. We're just seeing now in the last couple of quarters some of that going out. And so I suspect that will continue. I don't think it's all going. I think all things being equal, I'd be as equal overseas or net non-U.S. securities as I would own U.S. securities. I think there's areas of the world, I happen to be a big believer, although I don't want to see them win, but they seem to be winning in a lot of areas. But I have investments in China. I love Singapore. I love the country Vietnam. I like areas where growth seems to be going forward. United States continues to slide, unfortunately.
You know, Pete, I want to add to what you're saying there about Vietnam, and you mentioned Vietnam, for instance. And I think one of the things that Trump's trying to accomplish is take the dependence that we have away from China on the drugs and pharmacy products that we use, and in Vietnam, and bring these factories back here to the U.S. so that we employ people and we build the things again. So tariffs are trying to level the playing field. I know you're not a fan of them, but you know, and his argument is we've been taken advantage of for all these years.
We allowed ourselves to be taken advantage of. And corporate America willingly done it because they made so much more money and paid themselves handsomely. It's easier said than done, Marty. It would take a generation to move that back to what we would get to be anything reasonable. And the cost, and I'm going to tell you the thing that you're going to be talking about more about, and I'm not an expert on it, but the combination of AI and robotics, I think it's going to be much more difficult to get a job 5 or 10 years from now for the average person just because of those two things.
Yeah, and you know, Pete, we've had guests on our show that talked about AI, and you know, that's why the dock workers were so concerned about going and having automation come in, because they're fearful they're going to lose jobs to AI and robotics. So yeah, it's a very good point you make. You know,
China now makes 97% of their cars are made by robotics.
Wow, I didn't even.
That's a lot.
That's something. Well, Peter, you know, if one of our viewers wanted to get in touch with you, and I have to say, you know, Peter does engage with a firm doing financial planning, and would you say it's more of insurance based, or am I wrong?
It's casual. I would just sort of say that your viewers would be in capable hands with both of you.
Well, thank you for
And,
that.
and if you contact them and they'd like to know a little bit more what I'm thinking, but I think they should really, I think you two are capable of doing what needs to be done.
So look, if anybody is so enthralled and intrigued by Pete's comments, call me and I'll put you in touch with him. But Pete, I just want to thank you for coming to the set again. I think you've really given our viewers some great insight into where we were and where we're going, and those 5 points are tremendous.
Yeah,
so thanks again. You know.
Yeah, I'm grateful, but I'm still waiting for my reward for introducing you to your wife, which is now almost 40 years too.
40 years. I'll think about it. We'll work on it. We'll work on it.
Thanks, Pete.
Thank
It
you,
was a
Doc.
great show. Appreciate
Yeah.
it.
Thank you.
Let's hope to see you.
Yeah, so very good, Pete. So welcome. I should say welcome. Thanks for joining us on It's Your Money, and we'll